right, well, joining me on the line today is our good friend, precious metals advisor. You know him well, Tom Cloud. Hey, Tom, great to have you on the broadcast today.
Hey, Jerry, it's great to be on. I wish everybody a happy new year out there. We certainly had an interesting year in 2017.
Wow, no kidding. And here we are staring at 2018. And one of the things we like to do at the beginning of every year, and we were just talking about this off the air, this is now 7 years that you and I have been talking about the things that we have been talking about since 2010. And so our listeners, many of them longtime listeners, have been hearing us every year. And one of the things we like to do at the beginning of each year is, you like to give out basically some forecasts. And I think it helps individuals to kind of know what the geopolitical economic trends might be that could be affecting the prices of gold, silver, palladium, and platinum. So let's just go through each one of them individually. Let's begin with gold. Tell us what you see as we go forward based upon your 40-plus years of experience in the gold market. What is 2018 with Trump in the White House, a very disarticulated political regime in Washington right now, in a very uncertain global picture? What does gold look like to you in the year 2018?
Well, first of all, I'll say that last year on this show, I predicted gold would go up 10% for the year, and I don't make predictions without in-depth studies and interviewing people I trust, and gold for 2017 went up 12.5%. So if we look at that, the dollar went down a little over 3%, gold went up 4%. For every 1% the dollar went down. The historical number is 8%. So I would have expected gold last year to go up 24%. If I'd have known in advance the dollar was going to go down 3.2%. So as we look at this, I'm making a prediction this year that gold is going to go up 15% instead of the 10 I predicted last year. And like I said, gold ended up with a tremendous 2017 at 12.5%, and yet hardly anybody talked about it. But the things going on in Washington, North Korea, China, and we still think there's a 50-50 chance we'll see a gold-backed currency in China. Jim Rickards has certainly been talking to his subscribers and talking about huge possibility of a gold-backed currency as the Chinese continue to gobble up physical gold along with the Russians. And we've already seen payments switch to gold, and a lot of the trade being done with Russia and China. So we think a 15% prediction for this year is a very reasonable one. Yet, if the dollar were to slip another 3 or 4%, I wouldn't be surprised to see gold have a 25% year. But we're seeing demand, Jerry, it's unbelievable in Asia, is the people we deal with over there and the clients of ours that store in Singapore are paying higher premiums for gold by 1 to 2.5% than our clients are paying here. So it's still the best place in the world to buy gold, as Americans are still infatuated with the stock market and cryptocurrencies, and that's good to have something in every basket. So my prediction is at least 15% for gold in 2018.
So that would put us at a price, assuming we're starting from a $1,300 price base at the beginning of the year, about $1,495, almost $1,500 during the year of 2018. And you brought up cryptocurrencies, and I want to address that for a minute because we have seen a huge influx of money pouring into cryptos and into stocks even. In fact, many of the top brokerage firms have been noticing that since Trump has become president, many people are loosening up their wallets and they're starting to move into the stock market as well. And we have talked here, as we mentioned, for the last 7 years about how eventually this stock market rise that we see is going to give way to another crash. It's just simply the cycles in the boom-bust cycle of the Fed. But with the rise of cryptos, Tom, we've gone a step further and recently told our own members that not only is the petrodollar system and the inevitable breakdown of that system bullish for gold, but I think now cryptocurrencies have provided probably the most unbelievably compelling case for holding gold in your hand, because now you have a form of money, Tom, that is not even, you can't even hold it in your hand. And we know throughout time, throughout history, if you read monetary history, you know that people have a thing about holding their money in their hand. And so eventually we're going to revert back to the mean, and I think that's extremely bullish for gold. Let's go ahead and move on to silver. Now we've got gold, the gold forecast, about $1,500 in 2018 is your forecast there, about 10% from the $1,300 base at the beginning of the year. Let's move on to silver. Silver has been in a really tough market as of late, and I know you'll have some things to say about that. Many had hoped to see silver rise much more than it has this year, especially with the supposed growth in the global economy. Silver and even the growth in the solar industry and all the things we've seen, silver has just not really come along with its price. Its price still remains stagnant at around $17. What's your take on silver in 2018?
Okay, let's do first a review. That was my biggest mistake last year on this show, was I predicted silver would go up 15%, and it went up 5.1% for 2017. We've had several calls, and certainly I took my prediction very seriously last year, as I'm getting ready to give you one for this year. But certainly 5.1% is, while it's not anything as well as we would like to see, it is going in the right direction. And I am forecasting this year we're going to see at least 20% for all the reasons you mentioned, but the one that may be the biggest driver of all is the one that people read about, and that is the shorting of the market. Now, our sources in Asia that have been very accurate claim that both J.P. Morgan and other people are very close to, if not going long, at least going neutral in the futures market. And, of course, when that happens, if we go back to 2000 and we look to 2012, we had 12 years where these same people that are shorting the market were going long the market and making a fortune in silver through those years. And then we saw the shorting start, and we've seen J.P. Morgan build up vast amounts of physical silver by keeping the price down in the physical market. So in my opinion, there's no way anybody with economic sense is going to continue to short an explosive market like silver. So as they move out and either go neutral, or if they want to go long and drive up all the millions of ounces of silver they purchased, they can make money two ways, in the futures market and in the physical price market. So I'm going to give a bigger prediction this year, Jerry. I'm going to go out at 20%, and I've talked and prayed, and this is what I just feel like I'm to tell our investors. They need to get in silver as quick as they can. We only have a 20 coin minimum. You know, if you don't have a lot, buy $300 or $400 worth, but you need to be buying it, because when it goes, it's not going to be something like gold that goes up steadily. It's going to go up much quicker. And it finished the year at 1694 and times 1.2. I'm saying $20 minimum is what I'm predicting for silver this calendar year in 2018. But everything you mentioned is absolutely, they've got to keep their eyes on, but also keep your eyes on the shorts in the silver market and see how much longer they stay in there. But the guy that I trust the most tells me there is no way there'll be people shorting silver by the end of March. So that means to me you need to get in as quick as you can and take a position in physical silver. And talking about putting your money where your mouth is, I've just moved several thousand, I've just bought several thousand ounces of silver with my own money, and I could buy anything out there I wanted. So I'm just saying I'm putting my money where my mouth is, and would advise you to take that, and I think you'll have a very good catch-up year in silver.
Let's move on to probably the winner for the last several years, certainly the winner of all the precious metals, and that's palladium. Palladium is one that we wrote about in our book, Bankruptcy of Our Nation. I was extremely bullish on palladium back in 2009, and it seems like this year and the last year it's really just had a great run. Can you tell us what's been behind that in 2017? Why is it outperforming all of the other metals? And then, in addition to that, what do you see ahead for palladium in 2018?
All right. Well, in 2017, I made a bold prediction that palladium was going to go up 15%, and it went up 56.7%
Wow. Yeah.
for the calendar year. And I had a call this morning from one of our clients, and he was asking the same thing. And I'll go in and give you. I think palladium's going to go up 10% this year, but I think there's a chance it'll go up 20%. And what's driving it, of course, is the improved economic conditions worldwide and the car industry exploding, the demand for the catalytic converter. We continue to have problems in the mining areas of Russia and South Africa, where it comes from. The supply is getting very sporadic. It's being gobbled up in the eastern part of the world. Americans are still not investing. If you think the great economies they had with Trump, palladium's a great way to play it. And we've seen Tesla investing millions to do the solar panel production up in Connecticut in the United States. There's just a lot of hype in it. And what's happening now, Russia doesn't have the deposits to sell off. The government was selling off palladium to buy gold, and now they say, why are we doing that? We have one of the few sources in the world for palladium, so now we've seen Russia holding back the sale of their palladium, which puts a lot more pressure on the market. And this is going to continue. It's just, and if palladium went up 25% this year, it wouldn't surprise me at all. But I just feel that based on the way I've watched markets over the years, I'm taking a very conservative approach to 10% this year. And yet, if you don't have any palladium and you're a fairly sizable investor, I would definitely get some palladium. And we like the forms of the COMEX bars because they have a lot lower premium than buying the koala, or the maple leaf or the U.S. Coins, because they have way too high a premium in my opinion. So I would stick with the COMEX bars. But I'm still bullish on it, but I'm just afraid to go out there and talk about what some of the others are talking about, 25 or 30%, even though I think it could happen.
So you're saying about 10% for palladium? Is that what I heard?
Yes, I'm saying about 10, and hopefully it's going to be more. But I'm still not afraid to invest in it. When you look at money markets at 12 basis points, and 10% is pretty darn good.
Yeah. Well, if we look at palladium at the beginning of the year, it was about 1,060. So that would put, 10% would be about 1,165 or so, somewhere in there.
Yeah.
So that's
right.
That's a real respectable amount for palladium. Let's go ahead and continue on to the last precious metal on our list this morning, and that is platinum. Platinum has had kind of a tough, topsy-turvy kind of year, really quite a roller coaster. Talk to us about that in 2017 and what you see for platinum ahead in 2018.
Well, last year we were right. I picked it to be the least. I said it would go up 5%. It went up 2.7%. So I had a pretty good prediction. I'm going on and say it's going to go up 10 this year. It's got underpriced compared to palladium, which is amazing to see, palladium higher than platinum. You either look at it that palladium's, palladium's overpriced or platinum's underpriced. It's hard to go in there, but I'm putting both of them at 10% because in the platinum world it's 46 times more rare than gold, and yet we haven't seen the demand that we thought we would see in the of new ways to use platinum. It's still, people are still looking and saying, will these car manufacturers see palladium go up to 30 or 40% higher than platinum, and then at that point, platinum would be a huge buy signal if all these car companies started retooling. Even though platinum or palladium can be used for catalytic converters, they have a different melting point, so these manufacturing facilities have to retool if they want to change from one to the other. So when they all changed to palladium back when palladium was 300 and platinum was 900, we could see the flip-flop of that if palladium runs out and has another good year way above platinum. So, platinum's not anything I'm telling you to go out and buy now. but we want to keep our eye on it because if palladium does jump 20 or 30% and leaves, platinum 40% behind, you'll start seeing these car manufacturers sell palladium and buy platinum. So we'll keep an eye on it, but nothing to get excited about right now.
That would put the price of platinum at around 1030 or 1030 from its beginning of the year, about 936.
Right.
Hey, so let's before we conclude, first of all, just to make a comment on precious metals, the fact that all four of them, despite you being doing really good on the palladium side and on the gold side, all of the metals were up for the year. So they were all positive. They all closed in the green. Secondly, there has been, as you mentioned at the outset of this discussion, there has been the dollar. The dollar continues to be a topic of discussion for many global investors as they look at it, and they're kind of stumped as we have the Federal Reserve planning on unwinding and beginning its unwinding of its QE. We saw reports out this week from China talking about how they're considering either halting or at least minimizing some of their purchases of our long-term bonds. All of these things, they kind of throw the dollar into with a big question mark. Let's,
Well, it does. Well, Bill Gross this morning is shorting the 10-year Treasury, the greatest bond guru in the history of civilization, is saying the Fed's already told you they're going to raise rates next year. He says, why in the world is anybody? So I'm shorting bonds. And, I'm telling people the same thing. Get out of bonds and put the money in metals. If we raise interest rates 3 times next year, a quarter point, 75 basis points on $20 trillion, you start talking about $300 billion of more debt. This debt, Jerry, is going to continue to explode. Even if the stock market keeps going up, the debt is going to continue to explode, and that is huge positive for metals and very negative for the U.S. dollar. And that's what people have to keep their eye on. Is the number one indicator is the dollar. That is the number one indicator for metals historically, is the value of the fiat dollar against real money, precious metals.
Well, as we conclude, I want to just kind of celebrate our 7 years we've been doing this. And one of the things that I'm so proud of, Tom, is that we've heard from people over the years that one of the things that we teach, both of us, and you longer than I, because you've been doing it longer than I have as far as educating the public, but it's all about diversification. Gold and silver and platinum and palladium deserve a place in your portfolio. They certainly could be viewed as investments. Gold and silver, obviously, are certainly gold viewed as insurance, especially against any kind of uncertainty. But we know that precious metals alone are not the only thing that we should have in our portfolio. And I'm so proud of our talks together and our interviews over the years that people have heard that message over and over. They don't always hear that from people, Tom. Oftentimes they get really bad advice from other places, but I'm so proud that we have focused on the...
Well, I am too, Jerry, and I think when we first hooked up, we both have the same belief in the Holy Bible, and certainly we've been told to diversify since the book of Ecclesiastes, and you do need to put your wealth in different areas because we don't know what's going to happen, and it just makes common sense. We all would like to put all of it in the thing that's moving and which one looks the best and hope that, but time has proven diversification is the way, and I think that's the way God planned it. So we, too, have been proud for 40-plus years to give information to the public, the best possible information that I can give them, and I take that responsibility very seriously, as you do, and I think that's the reason, we've had the same thought process the last 7 years and getting information out to your clients.
Absolutely. Absolutely. And you and I, 7 years on, we still believe that the $20 trillion national debt is going to be a massive problem, that somebody's going to have to pay for it. We still believe that the dollar is as doomed as it ever has been. And we believe that gold and silver will be the beneficiaries of all of this poor monetary policy. The question of when, how long can this charade go on? We don't know the answer to that. But we do know that It can't last forever. That's for sure.
All right.
Well, friend, I sure do appreciate having you on the program. If folks want to reach out to you and talk to you more about these forecasts, or they want to learn how to buy gold and silver, how can they reach out to you?
They can call us at 800-247-2812. That's 800-247-2812, and have them ask about the special storage programs we have, the lowest storage rates in the world, and we'll be happy to talk to them about the different depositories available. And we just like to hear from them and help educate them and help them get diversified.
Fantastic. Well, as always, it's great to have you on the program, Tom. We look forward to next time.
All right, Jerry. Thank you.
Happy 2018. God bless you. All right, friends, so if you are in the market for gold, silver, palladium, platinum, you've heard Tom Cloud, you can reach him at 800-247-2812. That is 800-247-2812. And I also want to encourage you to consider getting his email alerts. Tom Cloud puts out email alerts to many, many people all over the world regularly. You can sign up for his free email newsletter at followthemoney.com/gold. followthemoney.com/gold. And there you'll find a sign-up form. You can complete that and begin getting Tom's email alerts each and every time he sends one out.